We have a proper topic on budget and we'll make a video related to budgeting which you can refer before attempting this question. Now for the timing, it says that you're supposed to prepare the production budget and the information is given above. The sales units for each of the month is given above for the 5 months, and at all times F Limited expect finished goods of inventory to be 15% of the following month's sales. You need to understand these lines very importantly, because in budgeting it's all about understanding the concept and then you can do the calculations. It says that finished goods inventory is to be 15% of the following month sales, which means that for the following month you need to supposed to produce 15% of that in the previous month. For instance, if it is July, you need to produce 15% of the sales units in July for the next month, which is August. So that is basically your closing inventory. Here is a basic format for production budget. So first of all, you list down the sales units, you add closing inventory, you less the opening inventory, and you get to the units produced. So this is basically the simple production budget, and it is asked for each of the months from April to June you're supposed to prepare. So the sales units for the 3 months are 2400, for May it is 2600, and it is 3000 for June. Now you're going to add closing inventory. As I told you before, it is for the next month sales. For instance, you'll do 2600 into 15% is going to give you this. For 3000 into 15% is going to give you the closing inventory, and 2800 into 15% is going to give you the value of the closing inventory, and hence it will be 390 for April, 450 for May, and 420 for June. So this is the calculation that you need to do before that. After this, you have to subtract the opening inventory. So you are supposed to follow this format every time you do this. So for the opening inventory, what are you supposed to do is you're going to work backward. For instance, it is going to be 2400 into 15%, which is going to be the opening inventory for this, which is going to be 360. You're supposed to subtract this. And for the next month, what you can do is closing inventory of the last month becomes the opening inventory of the next month. So for instance, 390 becomes the opening inventory of the next month, 450 becomes the opening inventory of the next month. You're supposed to subtract those, and you're going to get to the answer as the production units are going to be 2430, 2660, and 2970. So this is the production budget that you will be used for. Now the next part is that you're supposed to prepare a purchase budget. They've given you some information before that. It says that each unit of product requires 2 kilos of raw material are purchased 1 month before they're used for production. So this is the most important thing. Purchase budget is based upon production budget. So first of all, you're supposed to prepare production budget, then purchase budget, and then sales budget, and then cash budget is prepared. So we had made the production budget in the last part. So purchase budget uses the values of the production budget, like I've stated, April ki, May and June ki production budget ki values that are supposed to be used in the purchase budget. 2 kilos per material, and you're going to purchase the material 1 month before that. For instance, for May you will be purchasing in April, for June you will be purchasing in May, so 1 month before that. Further, they said that 50% of purchases for the month are paid in the month of purchase and receive a 5% cash discount, remaining 50%. So that is related to the payment not required yet, and the cost of raw materials expected to be 8 per kilo. Now we'll do the following calculation. For this, we will be using for April, May and June. We will be using the production budget for 1 month before. So for instance, the starting production units that you have is basically, for April you'll use May, for June you'll use this. So it is going to be moving like this. So 2660 will be here. For June it will be for May 2970. Now for June we will supposed to calculate that. How will we do so? The units for July. So for July will be for June. So we will calculate for July the production budget. So the production budget for this is 2800, the sales units. We're going to add the closing inventory and we're going to less the opening inventory as we did before. So for the closing inventory, it will be the next month 15%. So the next month 15% will be 2500 I can state here it is 2500 into 15%, that is going to be 375, and you're going to subtract the opening inventory, which is going to be 15% of the current month, which is going to be 2800 into 15%. Opening inventory will be 420. So the total will be 2755. So you will have to calculate for July. It is not required, but you yourself have to understand that 1 month before, which means July, will be used in June. So if the total is 2755. The next step is that we are going to multiply with the kilos and the rate per kilo. So we know that it is 2 per kilo and the rate is 8. So you're going to multiply all this with this, and you're going to get the purchase budget as 42560. You're going to get this as 47520 and 44080. So basically this is the purchase budget value that you were supposed to calculate, and that's it. So there are proper formats that you need to require for purchase budget. It's really easy. The production units into kilos into the rate per kilo, and that is how you do that. Alright, now the D part states that you are supposed to calculate the amount to be paid for purchases for each of the months from April to June. Alright, now this seems a very complicated calculation, but it's really easy. What you need to know is that you need to know the purchase budget values. You know that for April, for May, for June. But you need to take one thing into account, that they said you're supposed to pay 50% of the current month in the current month. For instance, for April, you'll be paying 50% in April, and you'll receive a 5% cash discount on that if you pay in this month. And 50% will be paid in the next month. For instance, for April, the 50% will be paid in May. So that is how you're supposed to follow. You need to first understand what they're saying, and then you can easily do that. Now for April, for May and for June, we are supposed to calculate the current month, and the previous month calculations will be done. For the current month, we know that it is 42560 is the total purchases that we've made, and we're supposed to pay 50% of that, for which we will receive 5% cash discount. So that is 95% of the value, which is going to be 20216 is going to be the value. Again, for this May, what we will be doing is 50% of the current month, which means that is going to be 47520 into 50% into 95%. That is how you will also calculate. That is going to be 22572. And for June, it's going to be the same. It is going to be 44080 into 50% into 95%. So for the value of June, we have is 20938. This is clear. Now we'll be moving on towards the previous month payment that we're supposed to make. Now for May, you will be paying for for April, you'll be paying in May. For May, you'll be paying in June. You've made the 50% payment, you'll make the rest 50% in May, and for May, the rest 50% in June. That is how you will be going through that. And now for we need to know for April, 50% is payment is to be made in April, for which it means that we have to calculate for the previous month. How will we do so? Move back towards the production budget and the purchase budget. If you go back, we calculated that 2430 were the production units that were supposed to be made. Later we decided that 1 month earlier was decided. You need to look back into your calculation. It was 2430 that we calculated. We can calculate the purchase budget for that is going to be 2 into 8, which is going to give us the total as 38880. Is that clear? So as it is 38880, we are going to pay 50% of 38880 because that is for the previous month, and hence it will be 19440. Is that clear? You can total the amount that is supposed to be paid in April. April is 39656. Now for May, we need to know that the previous month calculation, which means that you're supposed to calculate on the previous month amount 50%. So 42560, 50% will be paid in this month. Hence you will calculate that it will be a total of 21280, and you can total it as 43850. For June, you need to see the 50% of the next month. For instance, for June, you will be taking 47520 into 50% is going to give you for the value of June as 23760. And the total will be 44698. That is how you were supposed to calculate the payments to be made in each of the month. I hope that's clear. It is that you're supposed to calculate the current month values. We calculated current month into 50%, 5% discount you're supposed to avail, and these are the values that you get. For the next month, we calculated the previous month calculation for April as 2430 were the production units, into 2 kilos were required, and at 8 per unit. 3880 were the answer, and for this you will be calculating 50% for the production value of April, and hence this will be the value. For May we did 42560 into 50%, and for June again we did 47520 into 50%. The remaining of the June payment will be made in July. That is how we do so. If there are any problems, you can write down in the comment section below and I may clear that out. Thank you.